You are looking at the impact of my most recent call on ETFs. In this case, in gold, a substantial impact, recommending to sell gold at 4,000 US dollars, the equivalent on this ETF $400. Today you have $368. This is significant since recently you saw Wall Street raising price targets on gold for 2026. Having said this, if you wish to learn why you shall invest in gold long term, you have to refer to my live masterclasses published in 2023 and 2024. At that time, gold, it was trading around $158, and in 2024, $170, this ETF. I've been bullish since then, okay? So this is very important because many people, they have been talking about gold recently. However, I started discussing the importance of investing in gold in 2023 and in AI 1 decade ago, okay? So having said this, the recent call that it was published by the algorithm on social media, in fact, it was on the day that this traded above $400 pre-market and also intraday. There was a recommendation, I'm going to type here for your reference, to take profits of $400. Okay? Why, you ask? Why? Because not only this was going likely down, as you are seeing, but because the algorithm said you are going to buy these two ETFs, QQQ and the S&P 500, okay? Now, what you are going to see is not magic, is something that we already know, is mathematics. While this came down, you are going to see here the impact. So I'm going to change here. What did happen here to the power shares, which represents the US stock market? Not only we call it the bottom in April 2025 in the S&P 500, but equally the tech sector represented by this ETF. And notice that since then you had hundreds of calls telling you to buy more or to double down. Today, not only you have new all-time highs, by the way, you had 50 continuous new all-time highs, and since then you never had one single pullback, okay? So the markets never pulled back, on the contrary, and very clear instructions when to buy, while others, they were telling you to sell short. I'm referring, obviously, as an example to Bank of America and many other Wall Street banks, okay? So the call to sell gold, it was published on the day that this ETF, it fell to support. So there was a significant sell-off. Everyone went short the ETF both. And by seeing everyone going short the ETFs or most capitulating, the call, it was the perfect call, by the way, in the markets. I'm not just referring to gold. It was to bet this was going to rally, while gold, it was going down. I'm going to terminate by saying that even the most bullish hedge funds in the United States, none of them predicted that this could happen except our algorithm, okay? So you have here, I repeat, not only the explanation of the action short term as well as mid term, all right? In every single case, Wall Street told you, you go short, and today you are bankrupt, okay? So the same obviously about the S&P 500. If you are going to change here to the S&P 500, the chart is precisely the same, okay? These ETFs, this is not about earnings, this is not about technicals or fundamentals, absolutely nothing. This is about algorithms. I already explained this thousands of times. So I leave you here with the action in gold, explain it, notice step by step, and you find all this published in real time on social media to start with on X if you wanted to learn about, okay?